Welcome to the Crop Insurance Podcast, the podcast where we dive deep into the world of crop insurance. I'm your host, Mike Rydell, a third-generation crop insurance agent, and I'm thrilled to have you join me on this educational journey. At our family-owned and operated business, we've been providing crop insurance expertise for generations. Our goal here is simple, to educate our listeners. Crop insurance can be complex and overwhelming, but I believe that understanding it is crucial for every farmer. So whether you're a seasoned farmer looking to stay updated or a newcomer seeking guidance, this podcast is for you. Welcome to today's podcast, brought to you by Crop West Insurance Incorporated, your agent-friendly crop insurance group. Calling all crop insurance agents. Looking to level up your agency and boost your bottom line? Crop West Insurance has the solution you've been searching for. With their proven track record of success and a range of benefits, including increased commissions, specialized training, and access to exclusive resources, they are committed to helping you reach new heights of success. Join their community of agents today and let Crop West Insurance be your driving force in the crop insurance industry. For more information, please head on over to their website at cropwestinsurance.com. Crop West Insurance Incorporated is an equal opportunity provider and employer. Welcome to the Crop Insurance Podcast. I'm your host, Mike Rydell. In today's episode, we're going to do a little bit of a review on revenue protection. If you joined us last time, we spoke about the mastering your crop production records from a federal crop insurance compliance perspective. And this is important when you're looking at having a potential loss on your crop insurance policy and or in the future having any audits. Just making sure you're dialed in on those production records. Now, while we're talking about production records, at the time of this recording, we're at the tail end of harvest up in Montana. And at the same time, the harvest price is about to be set for federal crop insurance in Montana as well. Now, this is important because in years when you have a dramatic shift from your projected price to your harvest price, you need to pay attention because you may have a federal crop insurance loss when you have, in fact, cut above your guarantee. Now, again, your bushel guarantee is your approved yield times your coverage level. So if you're in yield protection, that's where this conversation ends. But in revenue protection, you're converting everything into revenue, and your guarantee is always going to be the higher of the projected price or the harvest price. So your guarantee won't go down, but your bushels produced will be multiplied times that harvest price. So in a year when there's a big decline, your bushels produced are going to be multiplied times that lower harvest price in order to account for that loss in revenue if you're in the revenue protection program. Now, why is this important? Like I mentioned, as that price is being set right now in central Montana, I get a lot of questions from producers where they're looking at their bushels produced and they either had a really good year in some of their units that maybe didn't get hit by hail or didn't get hit by frost because they were seeded a little bit later or maybe seeded a little bit earlier, just the stage of the crop. It wasn't as affected as some of the other portions of the farm. But in the portions of the farm that were affected by that frost or by that hail, they're cutting very close to their approved yields or even their approved yields times their coverage level. Now, because this year we're seeing at the time of this recording roughly a 26% decrease in price, that's going to mean if you're anywhere near your guarantee or your bushel guarantee with that huge decline in revenue, you're going to have a loss. And this is important because you need to turn in a notice of damage or a notice of loss right away when you discover that you may have a loss. So if you're going through your production records and you're looking at your average bushels per acre and you notice that they're close to your approved yield or close to your approved yield times your coverage level, and you're in a year where you're seeing a very large decrease in harvest price, you're going to want to notify your crop insurance agent right away to get that notice of damage or notice of loss turned in. Now, if it's 100% due to price decline or revenue decline, you in theory won't know that you're going to have a potential loss until after that price is established. Now that's fine. You can wait until after it's established, that next day it's established, once you learn about that price to turn that in and still comply with the rules. If you have any other kind of damage that occurred that lowered that production, say hailstorm or frost or insects or any other kind of insurable cause of loss, you need to turn in that notice of damage or notice of loss as soon as humanly possible, just to make sure that you comply with all the different rules and regulations of the loss process. Now, when figuring out what your potential payment could be, or you just want to be reminded how revenue protection works in regards to the changing in prices, I encourage you to go to our website, cropinsurancepodcast.com. We've just redone our website and we have a whole slew of new tools and digital applications for you to play with that will help you enter your own data or enter kind of dummy data to play with the math and play with different pieces of the policy. We're calling it our Crop Insurance Podcast Digital Playground. And to get access to that, you simply need to go to our website, find the corresponding piece of the policy you want to learn more about, click on that blog article or that educational material or course. And in those different blog articles and courses, you'll find a sign up for that digital playground where you can play with various pieces of the policy. So for the revenue protection piece that we're talking about today, if you go to that revenue protection article, you can go in there and at the bottom of the article, there's a form to fill out and it will give you access to our digital playground where you can plug in your approved yield, your coverage level, the projected price, the harvest price, your average bushel per acre harvest, and get a general idea of what a loss might look like in terms of dollar per acre, or maybe even just to confirm that, yeah, you may have a loss here and you need to turn something in. Now, these are just tools to play with and they're just for educational purposes. They're not going to tell you exactly what you're going to be paid because there's lots of different rules and regulations you have to take into account. But they can certainly help you get an idea as to whether or not you're going to have a potential loss in the field due to the large decrease in price from your projected price to harvest price in years where there's that dramatic swing, like in 2024 in Montana for winter wheat. Now, if you're just tuning into this podcast and you haven't listened to our others, I encourage you to go back. The one we released this last time around, the Mastering Crop Production Records, that's vital to understand how to track your production to be compliant with the rules for federal crop losses and or audits. We're also referencing our yield protection and revenue protection podcast from season 1. You can go back to season 1, episode 6 to learn more about that. We're also talking about our projected price and harvest price in season 1, episode 5. We brought that up. So there's lots of good resources on our podcast, on our website, where you can go and learn about these pieces of the policy in a little more depth to help give you an understanding of what your policy is going to look like, especially around harvest time when you're trying to just find out what your loss may or may not be. And this will also help set you up when you're looking to the future or the next crop year, because it seems like during harvest is when you're reporting your production is also about the same time in certain states where you're going to be signing up for your protection for next year. And with these lower prices that we're seeing, that's going to impact your decision on coverage levels, unit structure, additional products like SCO and ECO. There's a whole bunch of information that we've covered in our previous episodes that will help you determine what's the best course of action for you and your operation to help mitigate some of that risk. So make sure you check out all of these resources we have available. Now stay tuned, as in the next couple episodes, we're going to be discussing what to do if you see a large decrease in price or you have low commodity prices. How can you make some of that up with your federal crop insurance policy and help cover your bottom line or cover your input costs a little more effectively and cost effective as well. From my family to yours, thank you very much for listening. I sincerely hope that this presentation has been instrumental in enhancing your understanding of federal crop insurance. If you find value in our podcast, we kindly encourage you to subscribe and spread the word among your friends and neighbors. To access further information, please visit our website at thecropinsurancepodcast.com, where you'll find the latest podcast episodes, articles, and exciting new features conveniently located in one place. This information is not all-inclusive and is meant to be used only as general guidelines for educational purposes. For additional information, please see crop provisions, reference the Crop Insurance Handbook or Loss Adjustment Manual, or contact your crop insurance agent. This institution is an equal opportunity provider and employer.